Buried deep inside our global financial system, there are these incredibly powerful databases that you've probably never even heard of. But here's the thing, they are absolutely critical to keeping everything stable. Today, we're going to pull back the curtain on one of the most important ones, a system called FR 2052A.
Think about it. Every transaction, every single dollar, it tells a little piece of a much, much bigger story. So what if there was a system that could read millions of those stories every single day in real time just to check the health of our entire economy? Well, there is. Okay, so its official name is FR 2052A, the Complex Institution Liquidity Monitoring Report. I know, it sounds super bland, but please don't let that name fool you. This is not some simple report that gets filed away in a dusty cabinet. It's a powerful, high-frequency database, a direct line into the liquidity, really the lifeblood of the biggest banks in the world.
To really get what this system is all about, you've got to think of it like a financial EKG. It is constantly, and I mean constantly, monitoring the liquidity heartbeat of the entire banking system. And this right here is the key difference. Before this whole system existed, liquidity was just something banks managed on their own internally. But now it's actively monitored in near real time by the regulators themselves. That is a fundamental shift from just passive oversight to active, constant surveillance. It's a huge deal. So what kind of clues is this financial detective actually looking for? Let's dive in and decode the data. Let's unpack the evidence that FR 2052A is gathering every single day. This system is really focused on 4 crucial areas. First, you've got the basics: cash coming in and cash going out. Simple enough. Second is collateral. Basically, what assets has a bank already promised to someone for a loan, and what does it still have free and clear in case of an emergency? Third, it's funding sources. Where is all this money coming from? And finally, counterparty exposure, which answers the critical question: who owes the bank money and who does the bank owe money to? Every single one of these is a vital piece of the puzzle. So how does all this intel actually get from inside a bank to the regulators? Well, it flows directly from a bank's internal systems, gets collected together in a data warehouse, then it's processed by this FR 2052A engine, and boom, it lands right with the Federal Reserve. This isn't some summary report that shows up weeks late. It is a direct, unfiltered data pipeline. And the level of detail, the granularity here, is what makes it so powerful. The system doesn't just ask, hey, how much funding do you have? It asks, is that funding secured or unsecured? Is it coming from regular retail customers or from other giant institutions? Are your obligations contractual, meaning you have to pay them back? Or are they contingent, meaning you might have to? It's this deep, multidimensional view that gives regulators such a clear picture of a bank's actual health. Now, a system this powerful and, frankly, this intrusive doesn't just appear out of nowhere. It has to be built for a reason, right? To really understand the motive behind FR 2052A, we have to go back to a moment of total global crisis. Before 2008, regulators had these massive blind spots. They'd often wait for days, sometimes even weeks, for crucial liquidity data. I mean, think about Lehman Brothers. By the time anyone had a full picture of their liquidity crisis, it was way, way too late. The global financial crisis just painfully exposed that weakness for everyone to see. And so, FR 2052A was born, quite literally from the ashes of that event. It was designed specifically to make sure regulators would never be flying blind again. Okay, so we know the motive, but what about the method? How does this database actually work as a watchful eye over the economy? How does it act as this much-needed early warning system? The change was, well, it was dramatic. We're talking about going from days of delay to getting real-time alerts. From having a reactive response, basically cleaning up a mess after it happened, to proactive monitoring that could stop the mess from ever starting. And maybe most importantly, we went from being totally blind to systemic risk to actually being able to spot contagion before it could jump from one bank to the next. And this data isn't just collected for the sake of it. It's an active tool they use every single day. It feeds right into the Fed's famous stress tests, where they simulate financial crises. It helps them create resolution plans, which are basically playbooks for how to safely wind down a failing bank without taking the whole system with it. And it seriously enhances their day-to-day market surveillance, becoming their #1 tool for spotting systemic risk. So when you put it all together, it becomes pretty clear that FR 2052A is so much more than just a form or some bureaucratic report. It really represents a fundamental change in how we watch over and protect our financial stability.
There's this quote that I think just captures the essence of this whole system perfectly. It's a heartbeat. And behind it, a database tracking every pulse of liquidity. It really is a living, breathing part of our modern financial world.
Which, of course, leaves us with one final and really crucial question. This database was a huge leap forward, no doubt. But as data gets even faster, as our monitoring gets even more sophisticated, can technology like this finally let us outrun the next financial crisis? That's definitely something to think about.